one down on this. Count. Oh. Of the upside for Intel is just that NVIDIA's paying attention. So you're totally right. These systems in the data center and plant side or CPU data center for Intel and NVIDIA saying, hey, come on in, we want to help you build data centers. And then mute a couple of these things. What's up, everybody? All right, I came a little organized. We could keep it short and sweet. Not really a whole lot of new to talk about, even with the Fed, but we'll touch on it. I think just more of a continuation of what we've been seeing, but we'll quickly get you guys up to date if you've not been around or not in the steam room. Let me shut some of these things off. Hold on. All right, I got everything muted. All right, so I'm broadcasting, right? Everything's good. What's up, Struck? Davro, how are you? Adrian? Shanga? Hey! How you doing? Let me X this out. Okay, I don't need that anymore, right? Let me go to the room. All right, so let me go through a couple of things to start, and then we'll coagulate a little bit amongst ourselves. Just for anybody who's watching it on recording, they can watch the beginning of it if they don't want to hear us running our mouths too much. All right. Let's just start with the week before we start diving into where things stand. Obviously we had a big week with the Fed meeting. The street was expecting a quarter, but you were hearing some chatter of 50. There was different thoughts on 50. Again, people are mostly guessing, like myself. I felt that 50 you may get an initial reaction quite bullish from speculation, but ultimately I think that would have brought on some selling, because even though the Fed is cutting more, I think the main risk is if the economy starts to deteriorate, and the risk is the thought of the Fed being too far behind, per usual, too late, as Trump likes to call Powell, right? I still think that that's the main risk outside of some unknown exogenous event here, is if you get some deterioration in the economy. It doesn't look like that. I'm not an economist. I don't even try to forecast it, but kind of what we're seeing so far, looks like basically a lot of names and a lot of people out there already have gone through a recession. And some of the biggest of companies, the rich get richer, that old adage, they've been able to kind of batten down the hatches and battle through it and now prosper. Where, some of the smaller players out there, from companies to investors to consumers, they don't feel all as bullish as some things look out there, right? And that's kind of what we were going through with the Russell 2000. A lot of the consumer sentiment, down at near Armageddon lows. So I think a lot of that has been through kind of a recession in a sense. And I think now we're looking possibly on the other side of that. And that's kind of what we were talking about, right? That I think that's that big tail risk, that right tail risk. The ironic thing is we're not even really seeing it. Outside of the IWM and the small caps outperforming, we're not really seeing what we could possibly see if that kind of that rotation takes hold. It's been gradual, and basically they're using just some of the Mag 7 names, but not to get off the ball here. The Fed meeting basically was down to a quarter expected. 50 would have been a surprise. They came in a quarter. Powell not as dovish as people wanted him initially. Sold the rally. But ultimately, I think people digested what transpired, and it really doesn't change much of what we've been seeing here, right? The Fed is likely to cut again. Powell's going to be out of the way at some point in 2026 when his term is up. You're probably going to have an even more dovish Fed there, and you might even have some economic growth at the same time, right? And I think that's what the market's kind of looking ahead towards. And now that you're seeing the small caps start to find some real footing, a new high, by the way, in the Russell today, I think, if I heard correctly, the first new high in 1,000 trading days, 1,000, the second longest stretch of it in history. So kind of a big deal, right? Other than that, I'm kind of the one thing that has surprised me a little bit, and the market's full of surprises. I don't want to make it out to be like I'm never surprised, but I thought we would see more of kind of the rotation. If the small caps were going to do what they have been doing, we would see more of that rotation out of other things. And the market's done a good job of kind of this distribution in some of kind of the larger names out there where the money's rotating from has been very methodical. They get the right names up at the right times to kind of hold the indexes together. And then you get kind of an event where there's a decent amount of participation, and you got SPX and the Qs. They look like they haven't missed a beat. Now, again, I could be wrong, but I think small caps are up 4 times what percentage was what the S&P is up over the last month or so. But still, I've been impressed by the resiliency in some of the more crowded names out there, right? So on top of that, I think what we're seeing, because of the Fed getting that rate cut cycle hopefully underway and liquidity being in decent shape already, you've seen this speculative appetite out there. Again, we think of IWM small caps, but really the micro caps have been on fire. That's a group nobody really follows, especially on the institutional side. And that's where the big winners have been made percentage-wise, right? I mean, from $1 to $2 stocks going bonkers. Quantum names with zero revenue going bonkers. So that's where the heat has been. That's where I think the big momentum has been. And again, you have these where you have some underperformance on the big cap, the mega cap level, but then they rattle off a 3-day stretch where they kind of make it all back, right? If you look at those names, for example, like just quickly, a Microsoft, right? If you've been in Microsoft over the past 2 months and missed out on some of these smaller cap underbelly names, you're probably pulling your hair out of your head as a trader, right? And these things kind of are in the world of their own at this point. Netflix has been really quiet. Apple had a little bump up about a month ago, but kind of been more choppy since then, and that's been a big underperformer. NVIDIA, even with the big news out of AI and all this AI craze, stock has done nothing net over the past 2 months. All right. So this is kind of what we were talking about throughout the summer, and this would be bullish. All right. And again, I'm even impressed that some of these names are even performing even better. Right. If you go outside of Mag 7, a name like this, just keeps going. And Avgo, may not be as crowded as some of the others, but it is a crowded trade. It is a crowded name for good reason. So I think, again, net, I think we get a continuation of this. And I think that's a bullish thing if we do, right? Because these names have been a defensive positioning stance for a lot of the bull market of the past, right? We've seen them go into these mega cap names almost as defensive posturing, right? It wasn't a risk-on posturing. So I think what we're seeing right now is bullish. And on top of that, even with kind of the indexes pushing higher, you got small caps, new highs, you still have big pieces of this market more on the cyclical side and more tied to kind of global economic growth and rate cuts that have been really quiet of late. You know, like, again, these are not things we really love to trade, but this is how you can get a market to hold up when things need to cool off. You got the trannies here. Okay, we can say trannies now. Trump's in office, but the transportation group, I mean, this is not a bad looking setup at all right now, right? And again, hasn't done a thing here recently as the market has continued higher. The home building names, right, and they're right in the thick of things rate cut wise. Okay, they've kind of been battling back here. They haven't gone crazy in a sense, right? You got regional banks, financial underbelly, the financials in general. So you got big pieces of this market that can certainly see rotation if we need to see some of the hotter stuff cool off, okay? And the hotter things right now anyway, regardless, are all mostly under the hood, in my opinion. Again, I don't know if you've looked. I'm sure you guys have. Most of you guys trade these names. These names have been shot out of a cannon this week, right? IONQ, RGTI. You can throw a dart at any Bitcoin miner, which is now an AI data center play. They've all exploded. You know, everything. There's not, I mean, hey, you out there, remember this name? Have you looked at like this Tatos lately? Insane. So again, this, for me, and you guys know that these are the type of names I like to focus on and I like to look for opportunities on. But this is where, in my opinion, the big money has been made over the last couple of months. And we should continue to see that. And I think that would be bullish net for the market as a whole. Why do I say that? Because, again, nobody is in this stuff. Okay, nobody's in this stuff. And I'm going to show you in a second, institutions have been net sellers of equities since 2021, actually, late 2021. Okay, they just started buying. Institutions, right? A lot of these long-only funds just started getting long in some of these areas of the market. Okay, and that's what I'm going to show you guys now where that stands. Now, that being said, okay, can a market pull back just based off, price action being too strong? Of course it can, right? But I'm talking about kind of an end of a trend or even a true correction in a sense. It's really difficult to get even a legit correction, right? When you have so many areas of the market where money can rotate into. Right? You hear the old adage, even Tepper today on CNBC, even if you're not bullish, okay, even if you're cautious here, right? Because this market's expensive, right? A lot of the crowded stuff out there, and T, you remember we've been talking about this, PEs and stuff like that, they're expensive, okay? But there's a lot of this market that's under-owned, right? So even though these expensive names can run into trouble, right, and maybe even at best case end up being dead money for a period of time, this money can rotate into other areas. And these are big positions, a lot of money that can come out of pockets of this market and go into other areas that there are no sellers in. Okay? So I think that's the saving grace here. And I throw this disclaimer out there again, not to talk out of both sides of my mouth, but it's the market. We always got to deal with it, especially now in the world we live in. But barring an exogenous event, a shock, right? If you get some sort of shock, you're going to see selling in the market, right? you're going to see, especially the initial reaction, they likely take down everything. Everything I just said goes out the window when you get a shock like that. Okay, but I think it's only a matter of time before that money that's on the sidelines, that is not involved in a lot of this market, starts to look at that sell-off as an opportunity to get long, rather than they're already crowded names and they need to sell. All right. So I think that's the big difference here. So that being said, let me flip you guys through kind of why I feel that way and have felt that way. Okay. Here is, again, I think this, if you remember, I mentioned, again, not to just talk my own book, but everything I mentioned, everything evolves around kind of the small cap trade for me, right? Not just because I was long, but because everything on the sentiment positioning side of things, I think, evolves around this, right? How can you say there's exuberance out there, or right, that the market's too bullish, when you have an extreme short position on a major index? Okay, and that's kind of what you had here. We discussed that even the bulls out there, forget about the bears, okay? Even the bulls that are long, what they've been doing as they're buying mega cap AI names, they've been shorting small caps, right? You look at all these names that have gone bonkers, and a lot of you guys have been talking about that in the Steam Room and been crushing it. The short interest on a lot of these names that are going crazy have been going higher, not lower, even as these stocks have performed better. Why? Because a lot of these people running books are looking at it as, all right, I'm long NVIDIA, I'm long Avgo, I'm long Microsoft, I'm long so-and-so. But if the market pulls back, probably these names with zero revenue, right? A lot of these small cap names that don't have the balance sheets that these big guys have will probably go down a lot quicker and a lot more, right? So they continue to short those names as a hedge. Okay, the problem is when that is done to an extreme, you got a pain trade where if those names outperform those larger names, you're in big trouble and have to unwind that trade, right? And that's what we're seeing transpire here. Okay, so again, if you remember when we started talking about this, these are Sharpies, commercial hedgers. These are hedge funds in the green. Okay, you can see hedge funds have been aggressively shorting, even as the market has firmed up, and Sharpies have been adding long exposure. It got to quite an extreme over here, right, into this low. And, you know, as the market has ripped, you're seeing some of that unwind. Some of that unwind. You still have hedge funds net short small caps in a pretty meaningful way. And you still have Sharpies, commercial hedgers, still long the Russell 2000 futures. Okay? So, yeah, I think a lot of that, from what we just discussed on the intro here, a lot of that evolves around this trade, right? That's the thought, the sentiment out there in the marketplace. On top of that, here is kind of, here are commercial hedges, Sharpies, overall. So if you take all the equity index futures and you combine them, this is their net exposure in everything, right? If you combine it all. And even though, again, it's not aggressively bullish, okay, the market has come a long way, right? Every index has come a long way off the lows. Okay, usually when you get that type of price performance, Sharpies are likely at the least hedged at that point, because that price action usually reels in a lot of bulls, right? Flips bears from bulls. Okay. What's notable here is that they're still slightly net long. They haven't even net slapped on hedges yet. So these are kind of two things that I'm watching really closely, because I think a lot of things, like as we discussed, will unfold, right? Kind of we lose this little cushion that we have once these Russell 2000 shorts get squeezed, okay, and possibly flip long, and we start to see Sharpies aggressively slap on hedges, kind of like they did late in the year. Okay, So those two go together. Here are hedge funds, according to Goldman Prime. And you can see what I'm talking about here, right? So you don't confuse yourself. Just look to the left. Here's all U.S. equities. The blue is the last week. The black is the past 20 days. Hedge funds, they're in the Hamptons. They haven't done a damn thing. Zippo. Okay. Macro products, that's ETFs, kind of betting on the indexes, positioning in the indexes, slightly net short. Single names, slightly net long. All right. So as a whole, nada, zilch. Okay. They're not aggressively shorting the market up here, right? I guess they're smarter than that. But at the same time, net, they're not long either. Okay. Haven't been chasing. And when you start to dive in sector-wise, you really, outside of tech, there's just not much interest, right? You can see a little tech interest over the last month. Commercial services, that kind of falls under the tech umbrella. And then look at real estate, right? With rate cuts, they're shorting aggressively. Materials, industrials, right? Financials, nothing. So major underexposure here for a market that's been as bullish as it has. T, are you talking about the prior chart? This is from, there's a million services you could get it from, but this is from COT base. This is considered like COT data every Friday. We get another update tomorrow. Unfortunately, tomorrow's update will not include the Fed, right? Wednesday? I don't know. Will not include the Fed. So the following update will get the Fed reaction. But I don't expect to see anything too drastic here as far as change. Here's Goldman's sentiment. Well, I call it the positioning indicator because they have a kind of another indicator where they have sentiment indicators. But this is Goldman positioning indicator. All right. Again, this is not even net long yet. It's hard to believe. It's hard to believe. So again, I don't like to compare prior peaks because I think you get in trouble doing that, right? We talked about that. You don't want to necessarily compare everything to earlier in the year. Oh, we don't have that yet, so we can't pull back because not everything has to get to where it got to in prior tops. You understand? But as an example, this was kind of the highs going into early this year. Positioning wise, it stands out in a big way. Here are the Liberation Day lows, quite the washout, and they're not even net long yet. Not even net long yet. Right? Look at some of these things. Again, doesn't mean the market can't have a couple down days, and doesn't mean that if something pops out, the market can't sell off. What it means is that sell-off is likely to find buyers rather quickly, as opposed to everybody in and that selling supply hits the market, adds more fuel to the fire, adds to margin calls, yada, yada, yada. All right. Again, this is a chart that I think says everything you need to know. Okay. And for anybody, because I used to get the question a lot, CTAs always look wrong. Well, they do sometimes, especially when on the short side when they're at extremes. But if you're wondering how those systematic funds, where they make the money, this is the market they make the money. Okay, their goal is to catch big trends. That's where they make the money. Okay, so they have, if you remember, we've been talking about this for a while. They flipped. They were max short. They got squeezed hard. They flipped long. They continue adding to long side as the market firmed up, as VIX started to melt. And now they've been right up at full tank for multiple weeks now, if not longer than that. I can't even keep track. Time flies. Okay? So they're catching all of this right now. All of this. Right? Now, again, this will become a problem at some point when the momentum shifts and we start cracking levels to the downside. But just because the market is strong, they don't just start selling into it. You understand? That's where they want to be, the max long. That's where they pick up all the money. right? On the other side, max short, they pick up the money in bear markets. And they're very systematic. No thought, obviously, no emotion involved. Where discretionary funds, and that's the green line you're looking at here. Right? So that's folks like us making decisions, right? Emotion involved. They obviously aren't on the same page. Okay? Far from it. And, according to DB's model, they're slightly net short. And that's pretty much where a lot of kind of the fund positioning that I look at, hedge funds and stuff like that, they fall either slightly net long or short here. Okay? Yeah, flip side, early in the year, you had them both on the long side. Right? I showed that already. Hold on. Next thing here. I got a couple more here to show you. Here's what I mentioned about institutions buying, right? If you guys recall, mostly STEAMROOM members will probably remember, we talked a lot about when we start to see individual names break out, when we start to get excited and active in individual names, it's likely because the institutions are stepping in, right? Sometimes you get retail activity and it can last for a bit, but a lot of times after that rip, after that momentum kind of stalls, you have hedge funds short those names back down again. The underbelly names, especially the names we focus on, when they start to break out, when you start seeing good-looking charts, underbelly names, that's because those long-only funds, those institutions are starting to put money to work. They're building positions. And when they build a position, they're not like retail. They're not buying a $15 stock or a $20 stock and buying it one day and that's it. They'll buy a stock and they'll buy it in the range from $15 to $22. You understand? That's a great trade for us. For them, they're building a position and betting on the name longer term. Right? So you get these exaggerated moves. It's one, because there's no selling in these things. Nobody owns them. And two, you got big funds starting to piece into these things. Okay? So what you're looking at here, and if you remember, it was incredible. Even with market, so-called bull market of the past before this year's correction, right? The majority of the time, even with the market higher, we would see institutional selling into rallies, okay? And the only buyers really were buybacks and retail. And then when hedge funds would chase, that's when the market would kind of stall out, and then we'd see a sell-off. Now we've been seeing a completely different picture here, all right? Institutions have been the main buyer. And that's been a big change. And this kind of goes along with that. This is kind of funding spreads from Goldman that they follow. And again, kind of more macro funds. They look at them as the smart money, adding leverage to their books. And a lot of this rally, they really didn't participate that much. Up until recently, when we really started to see kind of this underbelly break out and the small caps really start to move, you could see how they've been adding some weight here. Okay, so again, according to Goldman, this bodes well for dips remaining shallow because they're likely going to add into those dips. This I just put on here again. Are there things that to worry about? There are a few things out there that are concerning, more so just because of how much certain things have gone higher. This is the single stock put to call skew. It's remained in contrarian bullish territory throughout. You're starting to see this roll over a bit, right? Again, going into earlier in the year, you really had some chasing on the option side, which didn't bode well for the next couple months. And you can see this starting to roll over a little bit here. Okay. You also have some hedge fund shorting in VIX futures, which we discussed, right? That's another kind of a risk if there's a trigger there, right? and possibly we'll keep VIX bid. We'll get these short-lived kind of VIX pops we were seeing. But again, with everything else that we're looking at here, a lot of these little VIX pops and a lot of these shallow dips are more likely to attract buyers, especially into certain areas, than sellers. What else we got here? Oh, here. I was referring to this on the institution chart. Okay, so here are the institutional guys down here. All right, and you can see up until recently, if you take that out, look at this. You had really one little period here where some buying came in from institutions. They kind of been net sellers, right? And prior to that, here's a nice stretch of buying here. So we're possibly in store for something like that. Knock on wood. And that would mean a continuation of kind of what we've been seeing, right? in individual names. Hedge funds, forget. Look at that. Hedge funds haven't had any interest and continue to have no interest. Now they can get long quick, but you hear it from even the top hedge fund managers, right? And again, it's a tough business for them. Anybody who's run client money knows exactly what I'm talking about, right? The market's expensive. You don't necessarily want to dive in here, right? You want to wait for possibly a pullback to get long, but the market knows that, and the market's not going to give you too many pullbacks. So they're stuck here, right? And on top of that, their kind of main hedge in their book, small caps, is running them over. So they're in a tough predicament here. And again, this is liquidity. And if you remember, you kind of had this sideways action that we were talking about here, right? This looks ahead a couple months. Global M2 and any liquidity indicator you look at right now pretty much looks the same. Okay. But besides a little sideways chop here, you've come out of this and made new highs, and this has been quite bullish since April. So nothing really concerning here about the immediate future, liquidity-wise. Again, this is something else, right? Like I remember this, and I mentioned it to you guys. Liquidity was quite strong. You had a very similar setup. Like I told you guys about this prior to when COVID hit. Okay, you had a little more long exposure than you do now before COVID hit. But then shit hit the fan with COVID, and that kind of took over, right? Nobody cares about anything else. Now, granted, when the selling stopped, you had a V-shaped recovery like no other, right? You had a bull market like no other. But, off of an event like that, an unknown, you're going to get selling. There's no way around it. There's no way around it. And being that things, especially things that are up significantly, that's a risk you need to consider, right? Again, for a lot of what we're looking at here, right, especially stuff the bullish stuff here, I would be like, I would just be buying everything I could possibly buy and not selling anything. Right? But the reason that, even though it's been every sell I put in has been a disaster because the stock's up 100% higher, but that's what I have to pay attention to, right? God forbid there is some sort of risk that enters, right? You're going to pay the price. So at the same time, I want to be smart about it. I want to lock in gains. I want to take down my risk. But at the same time, I'm not sitting on my hands and not looking for opportunities, right? I'm looking for opportunities. So I just want to be a lot more prudent about it. Just being that we've come a long way and there are some risk out there. Oh, I got a couple more here that are interesting. AAII sentiment survey. If you remember, again, this is just your run-of-the-mill survey every week. Okay, everybody follows this on the street. Everybody. Okay, you had how many weeks now that you've had more bears than bulls on this survey? Can you imagine that? You have had more bears than bulls in this survey for like the past 2 months. Okay, that finally changed this week. Finally changed. So you had a pretty nice size uptick in bulls from 28% to 42%, call it. Right? Mostly coming, well, a chunk coming from the neutral camp, some of it from the bearish side. But look, prior to that, 28% bulls, 32% bulls, 34% bulls. Crazy. Absolutely crazy. What else I got here to show you guys? So this is kind of what we've been talking about, right? This is the AI and Mag 7 big cap, mega cap basket from Goldman, right? And this is exposure. Okay, this was the highs. If you remember back then, some of you got sick because I kept talking about how crowded Mag 7 was. All anybody wanted to trade was Mag 7 on this webinar. All anybody would ask was about Mag 7, right? That's this point here. And here recently, after names like Microsoft was dead money for 6 months, Nvidia was dead money, some of these things came back to life. But you can see how quick, when the market turns bullish, where does that hedge fund money go, right? Where does that money go? It goes right to these names for good reason, right? These names are the best of the best. But they don't want it. They have, to this point, they haven't wanted to take that extra risk, right? They haven't wanted to go down the scale and look at different type of growth names. They've been sticking with just the big names. So now you're shy of that point here, but you're still quite crowded. Okay, you could see I think it was last week, you had a spike in buying. So, these names, again, I think the risk, I think that it's even more of a risk, I think, performance-wise in a bullish tape. Because kind of like we were seeing, I don't think these names fall apart, right? In other words, I don't think the small caps continue higher and these names fall apart. Some people do. Some people think you may have a replay of 2000, right? Where NASDAQ kind of bubbles and bursts and all that money eventually goes into small caps and everything else that's been dead for ages. That was post 2000. Okay. I don't see that right now. Right. But I certainly can see what a continuation of what we've been seeing here, where a lot of these names are more choppier. They're going to underperform. And from time to time, you're going to see some selling as they rotate out of that and looking to take risk elsewhere. Okay. But again, like this small cap trade for me, if you guys remember, I think it was Stacy asked me, like, what would make me bearish on small caps? She asked me a few weeks back. And, I hate when those words come out of my mouth because you guys know how superstitious I am. But kind of the setup really didn't have big picture-wise a bearish, would turn me bearish. Okay. Certainly you could have a correction where, let's say, the fundamentals of the economy deteriorate and they sell the small caps off. Certainly possible. But I want to buy that because that likely gets the Fed to get more aggressive cutting rates, and nobody's in the small caps. They're already short out the eyeballs. You understand? So that's kind of the backdrop that we were facing in this small cap, in the small caps for a couple months now. And that's, to me, it's still there, right? It's come off some of those extremes, but the only thing that's changed here recently is that the price action in small caps look better, right? The future, you can see a light at the end of the tunnel for the first time in a while. But as far as the bullish setup behind that, not much has changed. Not much has changed. Like again, I said it before. Even if even when we're in a Nasdaq bubble and it bursts, right? It likely will weigh out on small caps initially, but I think you'll have a replay of post 2000 where they would take that money out of all these crowded AI names and look for opportunities everywhere else in small cap land. All right. This is the final thing here. Again, one of the things that kind of keep me in check to just not go crazy. You guys know I love trading these names. I love trading names. This is my time. I'm a degenerate. I got degenerate blood, and I need some of these reminders to kind of just keep me in check from going cuckoo, right? Because if it was up to me, I'd buy the living piss out of everything I see. All right. So this is kind of Goldman has, which is pretty cool. Drawdown probability, right? Everything in this market probability. And again, common sense, but a good reminder that as a market has continued higher and we've come a long way, the probability of a simple drawdown, right, goes up. All right. So the things to just keep in mind as we want to remain bullish, but at the same time, we want to be smart about it, lock in profits, protect ourselves in a sense. All right. Again, the old adage is, at this point now with what we're looking at, I'm willing to give back some of the profits. I'm willing to risk some of the profits to make more money. Okay. But no, my first priority is not to give back all of the profits. Sometimes it's all of the profits and then some, right? My number one priority is that no matter how bullish things look right now, that's my number one priority. And that's just something that I've tattooed in my brain because, like I mentioned to you guys, was a big, big problem early in my career. All right, but that being said, as you guys can see, there are still opportunities out there, right? Even in a tactical sense, if you don't want to add weight, too much weight, all holding at the same time and stuff like that. All right. So that's kind of how I see it. Here's kind of internals here, right? So this is not including today. So maybe there's more a little more bullish heat on here, but you have a lot of different areas here to possibly see rotation if some of the hotter stuff needs to cool off. So many things. So many things. You know, a lot of the time you see a market at new highs like we are, especially coming out of a Fed, and everyone's excited. And this thing is lit up all red across all time frames. I mean, you actually have some green on here, right? But because of the rotation we've been seeing, it's kind of kept breadth in check. The only time we see breadth expand is when we see kind of small caps lead and a healthier look in the markets, right? And if you guys remember what we talked about the last couple of webinars, we're still seeing it. What the market likes is outperformance from the rotation, small caps, that crowd. Where the signals we look at start to show a little bit of nervousness is when they're selling that stuff and going into those crowded names. That's where you see VIX and VVIX push higher with the indexes. You understand? That's where you see a lot of the credit signals we look at not really confirm strength. You know? So anytime we have rotation or leadership from the small caps and from these rotation camps, the signal out of the market has been that's healthy. You know, that's constructive. And we continue to see that. That hasn't been the case. Prior to the liberation tariff correction, that it was the complete opposite. It was the complete opposite. All right. So that being said, that's what I got here. I'll quickly, again, not that anybody should be copying what I do. You guys know the game just as much as I do. Quick update of what I've been doing. I had a pretty nice sized T&A position. Most of you know. Well, I've moved some of that TNA exposure into IWM calls. Right now, I'm in IWM March 235 calls. I've in two pieces. I moved it over there last week, the week before, and I still have a chunk of TNA that I'm looking to do more with. Eventually, my goal is to have all of it in IWM calls with time, right? Not necessarily those March 235s. I may pick different strikes, but ultimately, what I want to keep in that IWM trade, I want to give myself a lot of time, and I don't want to be in a levered ETF, right? And then if we do get a pullback, I want to add, okay? And that's where I probably start adding TNA back. So that's kind of was my big trade there. The rest of the stuff in names, I've kind of been a little all over the place. GoPro is kind of my go-to name right now in a sense. As I think most of you know this already. It's done quite well. I'm still holding GoPro. What else do I have? Everything else, I don't really have meaningful size. I have drifts and drafts of stuff. Stuff that I've left behind. I got Riot. I had Riot equity. I moved up a chunk of that equity into December calls in Riot. I still have that. I still have some decent runners in a lot of the Bitcoin miners. Hut, Wolf, Cypher, I have a little bit of, quite a few of them that I've traded. And what else? Today I bought a little of a couple names. I bought this little piece of garbage, QSI. Honestly, not because the flow was any decent. This week, the flow, because of September OPEX, I can't bless any of it. Honest to God truth. That's why I really didn't do a whole lot. It was, to me, it's day trading off that flow because of rolling. But I bought this thing, caught some spec action today. It's a dollar stock with the word quantum in it. I don't mind taking a shot, holding on to that. And then I bought some of this. Again, had a little bit of action. I like the spot, PDYN. But this is more a trade, this PDYN. The QSI, I might pull a bit farts, like I did with this thing. This is another one, by the way, I have bit farts. But I've been holding bit farts for ages now. QSI is a biotech. That's good to know. That's great. Okay. So that takes care of that thesis. But again, I flow-wise, I wouldn't recommend it to anyone. That's why I started with that. And this PDYN, again, same thing. Caught some action. Wasn't bad. Cheap spec action. Nothing crazy. But I like the spot for a trade. That's it. All right. I didn't go crazy. The stuff that I'm kind of playing with decent size is stuff they bomb. Right? So GoPro, they bombed. Riot, they bombed. What else? Neo, I played, they bombed. A few of them that I didn't play that I'm kind of kicking myself. JD, they bombed. I didn't play it. So I'm kind of focused on that for decent size plays for me. The rest, I'm fooling around. But thanks for the heads up there, T. That information's definitely helpful. Only I can buy a quantum name that's not even quantum. That's hysterical. That's why it looks like this, I guess, right? And not like the other quantum names. That makes sense. So yeah. Other than that, like this week, sweeper activity has been nuts. But you got to understand, like here are the best action of the week. Oop. Tattooed. IONQ. Tattooed. QBTS. Annihilated. All these names, this is where all the top action has been. SDHC, I got a piece left. I'm holding on to that. I traded it. I got a piece left. I know it was down today. maybe if they come in there to April's, maybe I'll add a T, maybe. But it definitely caught nice action. I'm definitely holding what I got. I got a little less than half a position in it that I'm going to hang on to. Because, again, they're April, you know? They're April. So, you know, not to sound complicated, but what I'm trying to do is stick with, for decent sized plays for me, the stuff they come after aggressively, I want to be a part of. But what I don't want to do is I don't want to necessarily fall in love, right? It's happening with GoPro right now. You understand? I can't get myself to sell GoPro. And I don't want to do that. I certainly don't want to do that with everything new I buy. You understand? This approach I'm taking now is different than the approach I was taking a couple months ago. A couple months ago, I just wanted to buy and I wanted to give it room, right? I wanted to give it a leash. Why? Because we had a big tailwind behind us. Okay? Now, I still want to play, but I want to be a lot more tactical about it. You know, hence why I sold kind of this SGHC pop. You know, I don't want to buy everything that I like and hold on to it like I was doing. I don't want to do that. You know, I don't want to do that from this point. Okay, again, we get a little rinse, a little pullback at some point. You know, maybe that I change my tune. But I definitely want to be more tactical. And, you know, I say that at the same time while, you know, GoPro has been one of the few names that I played recently that I'm hanging on to. You know, Riot, I sold, was it the same day or the next day? And then I took a piece of that and put it in December calls. I should have held it, right? The whole thing, but I just don't want to do that now. The last thing I want to do is put on new weight here, even larger than I was prior. You understand? That's what I want to try to avoid here. What do I think of that huge position growth? What name, T? What name are you talking about? Where do you find that size 3? What? Oh, you're doing that. Oh, SDA. No, there's not. The flow has been incredible in that name. The flow has been remarkable. I mean, April calls, they hit them really, really aggressively. There's nothing wrong with the flow. You know, there's nothing wrong with the flow. But the point I'm making, T, was that they're Aprils. They got a good amount of time there. You understand? So if you want to catch kind of the big move there, you might have to give it some time. You know, that's the point I'm making. So you could do two things. You can buy it and you can give it a leash and give it time and try to catch that nice reward, or you try to take advantage of the momentum off them buying it and trade it. You understand? That's the that's what you got to look at here. For me, you know, I don't want to make a habit now. I bought GoPro decent size. I bought Riot decent size. I bought SGHC decent size, and I'm holding them all, right? Because then I'm not taking risk off the table. You understand? I'm adding weight. I'm going to be even heavier than I was. Yeah, it's hysterical with everybody expecting a down September, right? Hysterical. But that's the market for you, man. The market, you know, every time we look one way, it goes another. But that's hysterical. Whatchamacallit? T, that the April line in SBHC, there was huge buying. I took out trading shares and holding the rest. That honestly, that's kind of what I did. I agree with that. I think it's worth holding a piece. You know, I think it's certainly worth holding a piece. They're not huge profits, profitable name, and caught a ton of action. You know, I don't know what went on here this quarter. It was up, I think, pre-market this morning. They raised guidance, but who was it? GJT? Somebody told me that they were expecting a crypto announcement, something to that effect, something crypto related possibly, and they didn't get that announcement. So they kind of just sold the news, and it's back to where it started. You know, but net, I mean, look, this thing looks good. You know? But again, I'm not saying UT. I'm just saying even for myself, like, because this market's been so good in these names, like April buying, usually that's something I'm not even looking to trade, right? Because April's a long way away. Got a lot of time there. So, but the action has been so aggressive and the momentum has been so strong that even if they're aggressively buying in strikes further out, it creates a lot of momentum. You know, it creates a lot of momentum. So that's the main difference from what I'm doing now overall is I'm not looking for that call buyer to be right from here. I'm looking to take advantage of the momentum that call buying is generating. If I like the name, I'll leave a piece, but I don't want to get too crazy here. You know, I don't want to get too crazy holding weight. You know, let's stay a little more tactical. Yeah, I think the calls were in the money. Yeah, no, again, the action, by the way, guys, just so you know, the action, the buying that came into SGHC was very impressive. There's nothing wrong with the buying. You know, don't let a down day today sell the news day. That doesn't change anything. They inhaled April calls. If they were playing for what came out, the news that came out today, they probably wouldn't have played April, in my opinion, right? That buying wasn't targeting whatever news came out. I think the momentum players that were pushing it higher off that April buying, they were hoping for news. But that April buyer wasn't. Yeah, it was weird. I saw it up, and then I didn't even realize it was down. I saw it in my account that it gave back the gains. I was like, oh, shit, it reversed. So many deals, it's hard to believe the market losing steam. So many deals, it's hard to believe the market losing steam. Yeah, it's not really, I don't see the market losing steam. You know, I don't see the market losing steam. I just see crowded names possibly losing a little steam. But anybody who's traded names can tell you there's been ridiculous momentum in names. You know, like if you're trading the indexes right now and not trading names, you have no idea what's going on in individual names. No idea. Insanity. It's been insanity in individual names. Completely insane. Percentage-wise, especially for equity players, see, that's what we have. Sahil and I we're having this discussion Sunday. You don't really feel the true brunt of what has taken place unless you're an equities player. See, a lot of you play options, okay? So you're buying $600 stocks and you're buying calls with a premium that are more expensive than the stocks we're playing right now. Okay? When I see a Netflix go from 600 to 800, it's not that impressive to me. That's like a stock going from $6 to $8, from 60 to 80, right? If you're playing monthlies and you catch that move, of course, yeah. But again, you're taking a lot of risk to do that. One little pullback and know that premium is going to be zero on you, okay? For a stock that I'm buying to go to zero, I need a complete calamity. I mean, look at the moving GoPro since we played it, from $1.30 to $2.70. Okay, that's like your $1,300 stock going to $2,700. That's like your $130 stock going to $270, percentage-wise. Right? The percentage moves have been in these names that you guys have scored in, IONQ. This thing's up 100% this week. Do you realize that? 100%. Look at this. Where do you start from? $30-something? It's going to be 80 by tomorrow. This 75, 72 hit today. This one, RGTI, $15. All you wanted. Hit a high of 26 and change today. But I think a lot of retail is so used to, since COVID, playing options, weeklies, front month, that, they see options go from 20 cents to $10. That doesn't happen in the equity world. Yeah, these quantum names are nuts. And what's nuts about it, too, is that they trade options. These names trade options. So if you want to go that route, you can. And these quantum names of recent have been extremely liquid on top of that. But, the Bitcoin miners, I mean, a lot of us in the room, Sahil, me, Struck, we've been talking about these Bitcoin miners. I feel like that's been my favorite sector of all time. That's how much we've been talking about them. The amount of money you could have picked up on the equity side in these Bitcoin miners, I lose sleep over it every night. I lose sleep over it. Every single one. Bitfarts. If Bitfarts participates, it's broad. I think, Sahil, you're in this one now, right? That's been ripping. Look at this. We never stop starting Bitcoin. Yep. We're true Bitfart believers. We're true Bitfart believers. We're talking about this, by the way. For those of you wondering what the hell we're talking about, Bitfarts, we're talking about this one. Well, look at this week. $1.20 to $3.40. Okay? That's $120 stock going to $3.40 for those of you in the option where we're playing bigger names. And again, you're not talking about these things illiquid, right? Options, anything outside the big names, you have no liquidity. There's $1, $2 rip in calls and puts. You're getting robbed, right? In any illiquid names. These things are trading millions and millions of shares a day. Okay, you can take any size and they'll take it from you right like this right now. Any size. You know what this thing traded today? 180 million shares. Did you hear what I said? 180 million shares. 180 million. It's as liquid as the Atlantic Ocean right now. Oh, yeah, that was one of my favorites. I got a decent piece of Hut left. I still have Hut, Wolf, who's the other one? I have decent pieces of. Oh, right. But Hut, Wolf were my two favorites. My two favorites. But they're all of them, guys. All of them. Again, I say my two favorites. All of them. Even the laggards were sitting around, right? Kind of like that CLSK that Sahil bought recently. This thing was sitting around waiting for you. Like, listen, if you missed the Bitcoin run, the miner run, here's another one. Here's another one for you, right? Here. You missed the Bitcoin miner run? Here, BitDeer. Here's another one. How about this? You want even more speculative? How about a Hive? You want a Hive? Take a Hive. Nuts. Nuts. Again, listen, everybody has a different style. I said it back then when a lot of you were trading the mega caps and killing it, and I was pulling my hair out of my head, grinding it out, trying to day trade and make some money, and then a week would show up where kind of you got a little more participation, and I would have to try to make money. Like, the market works in cycles. That's what it does. You know, if you're an equity player, this has been your time. This has been your time. Yeah. You. How about this? You're not going to believe this, Wealth Legend. Okay, and I have no reason to bullshit. You guys know I don't bullshit. Okay. My average cost on Wolf, do you know what it is? I gave it away now because the circle's there. My average cost on my initial position of Wolf was $1.90. Here. That was my biggest position back then in the Bitcoin and all those Bitcoin miners when we bought. They were bombing leaps, bombing them. Okay. And then what happened? It had this move. I sold a chunk, but I left a decent chunk longer term because I liked it longer term. Right. Then you had this correction. Then these things were setting up again. Like the rest of the market was going nuts. And these Bitcoin miners are all changing their business model to now these AI data center plays, and the market like didn't care, and they started to catch flow again here. So I already had at $1.90. I added back some weight here, and then I sold it into the pop. But I still have like kind of my runner chunk. $1.90. You can't buy a piece of bubble gum for $1.90 these days. Nuts. And that was, I think, Druckenmiller, right? Is Wolf the one Druckenmiller has a position in or had? I don't know if he still has, but I think so. Oh my God. Craziness. All right, what else? Yeah, Oklo. I mean, Sahil's nailed this stock. He's been calling it the whole time, this Oklo. What a move. What a move. So, guys, honestly, there's too many to even mention right now. There's so many, you know. Again, I know I'm no exception. I'm no superstar. Yeah. For as many that I can talk about, you could probably talk about just as many, if not more. And the guy next to you could talk. You know, it's been 90% market. Maybe the other 10% has been us, but that's okay. That's okay. All right. It's the ability to be around and fire and take advantage when it shows up. That's what we got to do. I saw that today. That still looks good, King. You made me buy this one, and I thank you for that the last time off the action. OUST. But you see some of these like major breakouts. I forget. I can't even keep track. This Sphere. Look at this huge breakout in these names. Look at this. Like under the hood, you have a lot of things breaking out. A lot of things. SanDisk, crazy move. Here's the some of the action today. Okay. Again, this action, all of it, all these names here have September open interest that's going to expire tomorrow. Okay. So they more than likely roll at least some of it. So I can't, I don't put that type of action on the top bet list. Right. That's kind of, I'm only putting clean action on the top bet list. That's all that goes on there. But again, that being said, at the least, these are a few names to keep an eye on. Some of these names already, this QS, they've bombed this thing. Bombed it. Right? I think a few of you played this QS. If I remember correctly, I think they were actually underwater on some initially. But they just kept buying. All right. So look at this here. I'm sure it rolls some Septembers, but you had some big orders there. Here's one of you mentioned is Blue Fly. Jan $2 calls for a quarter. Yeah, this is not really my type of action, FHLS, some November buying. Circle caught some decent action, but there's a lot of open interest September. I like the spot Circle more than anything else. Ooh. Circle. Not the worst spot in the world for a bounce, but definitely keep an eye on it next week, right? If we see repeat buyers show up next week and it's still here, definitely a trade. This is another one I think you guys follow, NVTS. They've been buying here. What else is on here? Oh, you know what my favorite sweep was today? This one. But they have September open interest too. I just like this order right here. VFF. Okay. I don't know what it is. They grow marijuana or some shit. I have no idea. I just like the look of that December sweep here. December deep in the money dollars. Yeah, I feel I could definitely see that happen. Ooh, what the hell did I do? So again, if anybody out there who follows the name, been looking at the name, this got a nice looking December bet today. They turned profitable. I mean, that's a little more than 90% of the companies out there. But again, if we're supposed to wait till next week. Unless you really like something off the action, you like the spot. Like I bought a little shit today, but next week you see action in any of these names, that's your confirmation. Like look at the unusual activity list. Crazy. 5 pages long. Look at this. Oh, look at some of these names. You guys grab tons of flow. That broke out. There's so many guys. So many. Yeah, these Micron and Western Digital. Look at these things. Insane moves. So if these things cool off, maybe we see a stretch where they start coming into some of this stuff. We're already seeing it in the semis. Some of the cyclical semis, like an AMAT, starting to do a little better. Yeah, SanDisk has been on fire. Somebody asked, "What's my target?" I don't have targets really longer term. Like here's my target. This is what was my target, if you remember. Like I bought the TNA, and if you remember, kind of what I was looking for was at the least a test of highs, right? I felt like this had to break out to highs in this environment. And then what I would do is move TNA into IWM. Now, what's my target longer term on IWM? I don't have a target. Higher. I don't know. It's not even a target. And you could say it's foolish the way I look at it, but for those type of trades, it's more of positioning and sentiment. Where that may show up, who am I? How do I know where IWM trades at that time? So yeah, I want, like, this trade has been dead money. People have tried to get picked alongside in this trade and have gotten burnt over and over and over again. They finally gave up. They finally gave up. And then we had Sharpies get long to an extent. It was just an ideal setup for kind of how we look at things. So I think certain things have to fall a certain way, but if they do, this thing has a lot of upside. You guys don't understand. IWM's been dead money for so long. Small caps in general. I just think you could possibly get a nice move into next year. Yeah, I know. Crazy, right? I mentioned it earlier. I don't know if you were on yet. 1,000 trading days since the last new high. The second longest streak in market history. Think about that. 1,000 days? Insane. That's insane. It really is. So, but the good news, even for those of you not even in IWM, as a trade on IWM, if you play names, you know what I mean? It only means good for you. Only means good. Like, think about that. We've been in a bull market where we haven't really seen a bull market in individual names. We really, since the COVID rally, and that's 2021, since then, right? We had the bear market in 2022. We haven't really had a true bull market in individual names. And honestly, I know I'm a contrarian, and I've been a contrarian by saying it, but I really do think that's kind of that right tail risk. That nobody is even looking for. Nobody was even thinking about. Because again, just think about it, even in just regular life sense, right? The disparity between kind of the wealthy, right, or the wealthy and the little guy is bigger, larger than ever. So that gap just closing could be a big deal. Could be a big deal. No, it doesn't. It doesn't. That's why I don't listen. If especially if you get where the economy starts to grow again, right? And now you got, you have a more dovish Fed. That I don't think anything falls apart there. You understand? They just gonna, like you said, they're gonna underperform. I think the small caps will outperform in a pretty decent way. The only time kind of the big stuff crashes and burns is if a bubble pops. That's the only time it would. I mean, see, if this is the rotation, it could be a couple years at the least. For sure in 2026. For sure into 2026. But the time frames are so hard. The time frames are so hard to. But I think you want to be ready for it, and each and every day you get confirmation, you take advantage of it. Because, like I said, it's the action in names that we're really going to make a dent off of. Yeah, and that's the other thing too. Like with this whole AI thing, does it trickle down? Do we see the benefit in some of these smaller names? We're already seeing kind of these niche sectors benefit from it. Now the fundamentals haven't been there, but they weren't there in the internet days either. You know what I mean? They weren't there either. It's not going to end in a good way if the fundamentals aren't there, but these things never end in a good way anyway. IWM, I have March right now, March call. So I still have TNA, and I moved some into IWM March 325s. I'm in. Where I go next time I shift, I don't know. I don't think I'm going to go in the March 325s again. I might spread it out a little bit. Yeah, well, Horizon, they're fueling the fire, right? I mean, they're going to get their faces ripped off. I don't understand. Like, these guys have been in the market a long time. They should know better. They should know better. And why come public with it is the worst call ever. You're asking for a beating. You understand? You come public and say you're shorting something aggressively, they're going to look to squeeze you. They might not even have been looking to squeeze prior to that, but now they know you're short, they're going to squeeze you. I mean, I don't understand some of these people. What? They think they're going to talk down the stock with this type of momentum? Like, what do they think? They're not. Do they not see what's going on? Right? I don't get it, Hank. I don't get it. Any of them, anything right now, any of these names can rip you apart on the short side. I don't care what it is. You know, I mean, we see it. Fundamentals don't matter right now. You know, and especially when you have things like this, right? When fundamentals go out the window completely. You know, when you have liquidity look like this, granted, I get it, right? Fundamentally, they shouldn't be there, but that's not what moves these things. It's the short side's so hard. You guys don't. You don't need me to rant on the short side again, do you? The short side's so hard. Yeah. And girl trader, let's, you know, again, I hope I don't want to jinx it, but the future looks bright. Again, even if we get a pullback, you know, I think a pullback would be even better for the setup. Because you know what happens? Kind of like what we're talking about here. You get some weakness, what do you think happens? They're going to go short all these things again. They're going to go short all of them. You know, and if now small caps, micro caps are in play, they're going to get destroyed. And it's, you know, it's just going to fuel more upside. Yeah. We don't get tomorrow's update doesn't include the Fed meeting. Next week's will. So we'll see if there's any changes there. But that's got to be, you know, that's got to be first, right? First, we got to see that go. First, we got to see this go. And it may never go. It may never go. You know, it may never go. I don't know, Sahil. I don't know. You know, what you may see is kind of they get squeezed, they chip it down, but then any little weakness, you see it expand again. You know, that's what you may continue to see from this. They just keep going back to the well. They've been shorting small caps for a long time. But you know, if the macro picture changes, maybe that is a different story. I don't know. UWMC, that's a rate cut play, I think, right? UWMC. Yeah. I think a few people in the steam room are along this name. I think it's a rate cut beneficiary. So it should do better. Dips should find buyers. You know, it's kind of in this team too. These guys. RKT. Tree. There's your stock. You got a stock symbol with your name. You should be all over that. Yeah. So all these names, I think this is their time. Like, look at this. What was yours? UWMC. Oh, this is fairly new. What do they do? Oh yeah, rental leasing. So it's a rate play. This is a rate play. So it goes in that camp. Okay, so the more rate cuts get priced in, the more it looks like Powell is going to cut rates, and whoever is the Fed chairman after that, the better this will do. That simple. That simple. You know, you might get, like, for example, rate cuts start to get priced out of the market. You might get a little pullback in it, but they'll likely buy that, thinking that rates are heading lower. Ultimately, what's your worst enemy would be inflation, right? Because then you can't cut rates. That would be the worst thing for you here. But honestly, that's all I think it is. I think it's a proxy rate cut play. That's what it is now, anyway. Oh yeah, yeah. I mean, that's right. I shudder to think what whoever the next chairman he throws in there, and what happens like if the economy starts to improve. Supposedly, they're going to adjust rates lower anyway because there's structural problems in housing. That's why I think the opportunity, guys, that's still left here, and a big opportunity if this pans out, is all this stuff: housing, home builders, all this rate sensitive stuff. You understand? It didn't really even start yet. It didn't start yet. Like, you still got some time to the next Fed chair, so that's what, mid 2026. But you know the market front runs it by months. But you know, you want a blue chip name? Here, Home Depot. Here's your stud. You know, this is your stud. So if like Trump gets his wish, this Home Depot is going a lot higher. You know, going a lot higher. And I think the worst case scenario for all this play would be inflation. Like, inflation gets a little out of control, they would take down these names. So that's your risk. But barring that, I think there's a lot of upside here. Hopefully we get a 5 to 7%. Yeah, we should, Bob, by the end of the year, CEO. I mean, we should. That's not even a lot, right? We should. But who the hell knows? We should. You know, the other thing too, one last thing, and I'll let you guys go. The other thing that's kind of, oh, look, this is interesting. So this is the S&P 500, right? So if the economy kind of muddles through or grows and the Fed's cutting rates, you know, you get decent upside. The only time it's not is if kind of you get the market starts to price in a recession. But what I wanted to show you is this. Where's the fund flow? Because that's interesting. This usually comes at the end of a rally. I'll show you here. Hold on. I have it here somewhere. Did I mark? I think I don't. Oh, here it is. This is global, but very similar. Okay. So usually what you get is kind of a spike in equity fund flows. And that's kind of by capitulation, if you want to call it. Right? Everyone throwing in the towel. Okay, I'm in. And you usually get that at the end. Like you had it here, right? Late 2021. Then you had 2022 bear market here into early 2025. So, I mean, we were below the zero line a week or two ago. You know, so we're muddling around here. So that's usually the last time you see kind of, again, like that buy capitulation for that trend to come to an end of some sort. OPEC's tomorrow, yeah. September OPEC. Yeah, that's why the flow to heel has been frustrating for me. Otherwise, if we see, put it this way, for those of you in the steam room, if we see 1/16 of the action we saw this past week and a half, we'll be doing cartwheels all over the place. 1/16 of what we saw. Don't ask me where I got that fraction, but I'm trying to give you guys the mental picture here. You know, that's this action has been crazy. It started last week because of September OPEC. There was a lot of September call buying, a ton of it over the last couple of months, all throughout the summer. Think back how much September call activity we saw. So a lot of replacement there. If we see anything even close to what we're seeing now, as broad as it's been, you kidding me? We're not going to see anything like that, but we still, we should see still some healthy risk appetite. Yeah, but next week you got a clean slate. So any action we see next week, it's clean. We don't have to worry about the rolling or anything like that. So that's good. Okay, for tomorrow, I feel I should just stay off the screens until Monday so I don't get spooked out of my tree. Yes, take the day off. Go pick some pumpkins or something. Clear your head a little. Triple wicket. Oh, look at what Strzok's trying to do to me on my way out. He knows how superstitious I am with the SPY 666. What is he trying to do? Guys, SPY 666. I don't even want to think about that. Again, for those of you who weren't around in 2009, the S&P 500 SPX bottomed at exactly 666. So now you got SPY 666. Antichrist. I'm going to have nightmares now. Brooke. All right, my friends. Enjoy the rest of your evening. Steam Room members, I'll see you mañana. The rest of you, I will see you next week. Have a good night, everybody.